Are you struggling in real estate, new to real estate, maybe a wholesaler or cash buyer, and you're looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet and analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. Before we dive in, if you haven't done so, hit that like button for me. And if you know somebody who might find this valuable, share it with them as well. This week's episode keeps us in Kansas, and we are going to break down 1914 Monroe Street in Grand Bend, Kansas, 67530. They are asking $180,000. They just had a $10,000 price drop. It is a 4-bedroom, 3-bath home, 2,000 square foot, and it has been on the market, whoa, for 381 days. So there's got to be something wrong with it here. Let's start with the pictures and see where that takes us. Tile foyer, front entrance, I guess. Dining room right there. We can't actually use the fireplace area. Basic kitchen. Cabinets all busted up there. Formica countertops. Um, Blinds are broken. What we got in here? Yeah, the fireplace looks nice, but you can't really enjoy it like for the look or anything like that. It just seems out of place. First floor family room, bedroom, walk-in closet, nice shower, dual vanity. Here's an older bathroom in the laundry room. Yep, bath in the laundry. There's a bedroom with carpet, very green carpet. And another room, got some old paneling, some wallpaper, 2-car garage, that's nice. Fenced backyard, tiny yard, there's not a whole lot of space there. All right, let's see what else we can find here. What else are they? What's the agent telling us? Back on the market, remodeled baths. So they probably had a contract fall through if it's saying back on the market. Large enough for family, accommodating, floor, bedroom. There's 2 large living spaces, 3 total bathrooms, probably 2.5 bath. All right, so the agent's really not telling us a whole lot here either. Built in 48. No, we already looked at some pictures. We don't need that. Anything around the area here? Maybe? No. What else? All right, for the area, there is 54 homes currently on the market. Average price range of 70 to 500. Wow. This is an interesting number here. 38% of this area are renters. Almost 20% are college grads. Median age is 39. Average home price is 203. Oh, I got a little mortgage calculator built in there. I'm still using Bankrate. All right, overall value-wise, we got a 183, 173, 180, 80, 2.5. Overall average would be basically 180, 179.5. They're at that. I think that might be what the ARV is, but this sucker's going to need some updates to hit that number. Sale changed. So they've been on quite a while now. When they started at 190. If anybody else is sold around here, we go. There's some sales from really long ago. Those are not really relevant. What else we got here? And they're just that guy's listings. That give me a ton to go on here. Overall value wise, I think we're just going to have to go with these general numbers. And we're saying the average value is going to be 180. So I think that's what we are going to go with because I'm not really seeing many comparable sales. And I'm new to using homes.com. So we're just going to go with that average and see where it takes us. So now I think we've seen everything we can on homes.com about this listing. Now we're going to jump over to the Invest Nest and break down the cash deal. I've got it pulled up here on the Invest Nest. I love this site. It is super user friendly and it's easy on the pocket. I think it's like 40 or 50 bucks a month. Definitely a lot less expensive than some of the bigger guys like PropStream or Privy. Great sites, not hating on them, but for beginners and if you're struggling and you're kind of cash strapped, I would seriously consider the Invest Nest. I will also put a link down in the show notes for first week for free and 50% off your first month. So the Invest Nest is telling us the estimated value is 183. It's not giving us a number for rent. Another really cool thing about the Invest Nest that they do include in their price is skip tracing. Click that thing and you are off to the races with the direct seller's information. Let's see when they bought this thing. Non-disclosure state, I bet. Yep, not telling us anything. All right, let's analyze. We're going to call this just the property address. And our purchase price, I think the end value or ARV after repair value is that 180. I really do believe that. So for a cash offer, we're going to say 180 times 70% gives us an 126 amount. Now we're going to deduct our renovation costs, and I think those are going to be probably right around $25,000, $26,000. So we'll take that off, and we're going to offer $100,000. Closing cost, we're going to kick that up to 4% because we're going to offer to pay both sides, buyer and seller, of the closing costs. Your lender is going to charge you 2 points, whether you're using a traditional lender or a DSCR lender, debt service coverage ratio lender. They're basically giving you a loan based on the production of the property. Improvement costs, we said we're going to be 26,000, and we do want to lump those into the loan. And we're going to put down 25%, and we want a 30-year term. And overall, our rates today are right at that 7, I do believe. Rental income. We're not picking up any numbers here, so we're going to check with HUD or Section 8. And for a 3-bedroom, they're saying they will pay $1,220. And another spot I love to check is Rentometer, and that is not good. So they're saying there's not even enough information here to be able to tell us what the average in the areas are. Maybe if we try that. Nope, still nothing. Bummer. So the only number that we have to go off of, because Holmes wasn't telling us anything, I don't believe. No, Holmes didn't tell us anything. The Invest Nest didn't have it. The only spot we have to go is this 1220. We're going to play it safe and just go at 1200 for our projected rents. We'll plug in 1200. Property taxes, we're going to go with what they say. Insurance, I like to factor in 125 a month or 1,500 a year. Property manager is going to cost us 10%. and all of the utilities are going to be paid for by the tenants. Reserve, or I call it my war chest, that is 5% for vacancy, 5% for repairs and maintenance, and 5% for capital expenditures. That's going to be your big ticket stuff like your roof, your siding, your HVAC, your windows, because eventually those things obviously have to be replaced. Nothing lasts forever. So 15% off the top each month goes into a separate fund for when things go wrong, because this is real estate. It's not a matter of if, it is when. And we're going to plan to increase rents about 2.5% per year. And we are real estate investors. We don't pay full commissions. Let's see what these numbers look like. Does it cash flow? You were looking to see if it cash flowed. I know. I got to ask you just one more time. If you haven't done so already, hit that like button for me and share this with a friend who may find some value out of it. Oof, negative $72. That's no fun. So for a little over $37,000, you can lose $72 a month. And cap rate is actually pretty good. I like to look between a 6 and an 8. Cap rate is more of a multifamily thing. For this purpose, cap rates, I like to see them between about 6 and 8, and that is the capitalization rate. That's NOI, net operating income, divided by the property value. And that's how you come up with your cap rate. DSCR is just bad, 0.89. DSCR lenders want to see at least a 1.1 or a 1.2. Cash on cash, you're negative. Return on investment, somehow you're positive. I'm still trying to figure that out. And here's another reason why I do not like the 1% rule. Is this is saying the 1% rule works by 1.2, yet it's a negative cash flow deal. So there's my 2 cents on that. Another great thing about the Invest Nest, they break all of your fees down so you know where each and every single dollar is going. And we're about 6 years into this before we actually see any kind of return, cash on cash. And just overall, we're still negative on equity even before we plan on selling it. Wow. So this is a horrible, horrible cash deal. Now we're going to do my favorite part and jump over and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. A link will also be down in the show notes. We said our ARV we think is actually 180. So our purchase price on a creative deal, we're not using that same 70% value number because we're asking the sellers to be our bank. Overall, we think it's worth 180. We think there's going to be about $26,000 in renovations. So we'll keep with that same number. I think we knock our price down here, that same amount, and then go from there. Maybe a little bit more. Maybe we knock 30 off. So we're going to offer 150,000, and we're going to offer them a 4% interest rate. Now, what is this PITI thing? That is going to be your mortgage payment. That stands for principal, interest, taxes, and insurance. For that to figure out, we're going to jump over to bank rate. We're going to say our offer price is 150,000. I only like to put down 5%. Our rate is going to be 4%. Our insurance we said was 125, and our taxes, the Invest Nest told us 218. 218. All right, let's check it. $1,023. So we're going to come plug this in. 1,000. Is that right? 1,023. And our rents, we were projecting at 1,200. I think this is going to be negative too. Yeah. Actually losing more money every month. No, not quite. You're losing 123 a month on this, even at a creative deal. Wow, that's really bad. So cash to the seller, we'll finish this out. 7,500. Agent, they're not doing anything. $500. Assignment fee where you're not working with a wholesaler, so that will be 0. Closing cost is that same 4%. Renos, we said, are about 26,000. 2 months of holding is that mortgage payment, no arrears that we're aware of, and a good transaction coordinator or TC will cost you about 1,500 bucks. So all in, this one actually is a little bit more cash heavy for almost $45,000, and you're well over 30 years before you get anything back. Bad deal all the way around. Well, sometimes we get a bad deal all the way around. A couple things from this episode. Not a good creative deal, not a good cash deal. And also that 1% rule, it said it worked when we analyzed the cash deal, but it was still a negative cash flow deal. So that's why I don't like the 1% rule, because it can get you into a bad deal. It's certainly one of the things that I started with, and plenty of times I will do kind of a sniff test with that, but that's my own 2 cents. I will stop my rant and thank you all for watching, tuning in this week to the weekly deal analysis here in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. We will see you next week.